You could owe hundreds of thousands in back sales taxes right now and not even know it. And the states are using AI to find digital creators who aren't compliant. I'm talking about content creators, course sellers, and digital product entrepreneurs who think sales tax doesn't apply to them because they're selling online. But what nobody told you is that the Supreme Court's Wayfair decision changed everything. And now you could have sales tax obligations in dozens of states you never even visited, despite what you might think. I'm just a small creator, or my products are digital, aren't defenses against sales tax audits that could bankrupt your business overnight. Here's the reality. If you're watching this, you're probably selling digital products, courses, or content across state lines. I'm doing that right now. Maybe you've heard about sales tax, but figured it was too complicated to deal with right now. You'll handle it when you get bigger. Or maybe you're hoping you're too small to get noticed by state tax authorities. Or perhaps you believe that because you're selling digital products, not physical ones, you're somehow exempt. Well, you're wrong for thinking any of this. The states don't care if you're small, they care if you owe them money. Digital products are taxable in most states now. And dealing with it later means accumulating penalties and interest that can triple what you originally owed. Most accounting firms, they ignore digital sales tax completely. They'll do your income taxes, maybe your quarterly estimates. Sales tax for digital creators, that's too complicated, they'll say. Or worse, they'll tell you you have nothing to worry about. The truth is, if you're looking to grow your business to where you want it to be, ignoring sales tax will destroy you. Because when that audit letter comes, and it will come, you won't be able to expand. You won't be able to invest in growth. You'll be too busy dealing with tax liens and payment plans. At Numeratus, we specialize in the complex compliance situations that other firms won't touch. We make sure you get the attention to detail you deserve so you can build your business without the constant fear of that audit letter. If you've stayed on this video this long, it means you know something's not right with your sales tax situation. You want to know what you actually need to do to get compliant before it's too late. I can't guarantee the states won't come after you for past sales, but I can tell you that taking action now is infinitely better than waiting for them to find you, and they will find you. AI makes it inevitable. Now here's something most creators don't realize. When states audit you for sales tax, they don't just look at 1 year. They go back as far as their statutes allow, sometimes up to 10 years, if they suspect fraud. And every year they add penalties and interest that can double or triple your original liability. Picture this. Sarah is sitting at her kitchen table, a cup of coffee in hand, sorting through the day's mail. Normal Tuesday morning. Then she sees it. Official letterhead from the California Department of Tax and Fee Administration. Her stomach drops before she even opens it. The number at the bottom of the page, $47,000. She reads it 3 times. This has to be a mistake. Her entire business only makes $300,000 a year. She's never been to California. Her hands are literally trembling. Coffee spills on the letter. She's thinking, is this real? Is this some kind of scam? But it's real, and here's how she got there. 2 years earlier, Sarah was on the top of the world. She'd finally done it. Quit her corporate job, built an online course business from her spare bedroom in Texas, teaching graphic design to aspiring freelancers. She was meticulous, LLC properly formed, QuickBooks subscription, even hired a local CPA who'd been recommended by 3 other entrepreneurs. She paid her quarterly estimates religiously, never missed a deadline, kept every receipt. She thought she was bulletproof. What she didn't know, every single time someone in California clicked buy on her course, it counted towards something called economic nexus. She'd never heard of the term. Her CPA never mentioned it, not once. California's threshold isn't about how much money you make, it's about transactions. Either you make $500,000 in sales, or you have 200 transactions to meet economic nexus. Sarah only sold $23,000 worth of courses to California. Tiny amount, but she had 247 California customers over 2 years. The original tax she should have collected was $2,300. That's it. But California went back 2 years, added penalties for each month she didn't file, interest compounding daily, plus their negligence penalty for not knowing the law. $2,300 became $47,000. And here's where it gets worse. California was just the first letter. Over the next 3 weeks, she got letters from New York, Texas, Illinois, 14 states total. The combined bills, over $200,000. Now look, this is a fictional example, but this exact scenario, it's happening to thousands of creators right now. The states are sharing data through something called the Multi-State Tax Commission. They're using artificial intelligence to scan payment processor records. They know who you are, where your customers are, and exactly how much you owe. Do you know which states you have Nexus in right now? Most digital creators don't even know what Nexus means, let alone where they have it. Here's what creates Nexus. Hitting sales thresholds, usually above $100,000 and between $500,000. Hitting transaction thresholds, usually over 200 transactions. Having affiliates or contractors in a state. Storing products or servers in a state. What this means for you? If you've been selling online for more than a year, probably have Nexus in multiple states and don't even know it. But Nexus is just the beginning of the complexity. Even if you know where you have Nexus, there's another trap awaiting. And that's point number 2, the digital product classification disaster. Tom thought he was being proactive, smart even. He'd heard about the sales tax issue, spent a whole weekend researching, found out he had Nexus in 10 states, set up his shopping cart to collect sales tax on everything, felt like a responsible business owner, finally sleeping well at night. 3 months later, he's staring at his computer screen in disbelief. Emails from the Texas Comptroller's office. Subject line, cease and desist, illegal tax collection. His first thought, this has to be spam, but no, it's real. And it's about to get expensive. Tom had been collecting sales tax on his online photography course in Texas, and it seemed logical. He was selling something, so collect tax, right? Wrong. Dead wrong. In Texas, educational courses are tax exempt. By collecting tax he wasn't supposed to collect, he committed a misdemeanor. The penalty, $500 per transaction. He'd sold to 83 Texas customers. Do the math. $41,500 in penalties for trying to be compliant. But wait, it gets more insane. While Texas was fining him for collecting tax he shouldn't have, Washington State comes in and they were preparing an audit. They were going to audit him, not for collecting tax he should have, because in Washington, online courses are taxable. His downloadable preset packs, taxable in New York as digital products, non-taxable in Florida as creative services, taxable in California as downloaded non-taxable if streamed. Tom's sitting there with a spreadsheet, trying to figure out 10 different states' rules for 5 different products. His head's spinning. He's got cease and desist from one state, audit notices from another. He can't win. He calls up his accountant. I don't handle sales tax, they say. It's too complicated. He calls a sales tax specialist. That'll be $15,000 to clean this up, and $2,000 a month going forward. His profit margin, 30%. The compliance costs, about to eat half of that. This isn't a real problem, but this confusion, absolutely real. Thousands of creators right now are either collecting tax they shouldn't, facing legal action, or not collecting tax they should, accumulating massive liabilities. Are your digital products properly classified for sales tax purposes in each state? Most creators treat all their products the same, not realizing that misclassification can lead to both criminal charges for illegal collection and civil penalties for undercollection. Here's the reality. Each state has its own matrix. Some states tax all digital products, some exempt educational content, some only tax downloads but not streaming, some have special rules for subscriptions. What you need to understand, you can't guess. You need to know exactly how each state treats each of your products. Now, even if you figure out Nexus and classification, there's one more thing that can save you or destroy you, and that's point number 3, the voluntary disclosure Lifeline. Maria was done, sitting in her car in the parking lot of her accountant's office. She was ready to give up, close the business, declare bankruptcy, maybe go back to her old job if they take her. She just learned she owed $180,000 in back sales taxes across 12 states. Her business's bank account had $50,000. Her personal savings, maybe another $20,000. She was sobbing. 5 years building this business, finally making good money, and now it was over. But then her accountant mentioned something. Voluntary disclosure agreements. Wait, what? Maria said. Here's what most people don't know. If you come forward before the state finds you, they'll cut you a deal, sometimes a massive deal. Maria spent the next 2 weeks on the phone with the state tax departments, humbling herself, admitting to mistakes, and asking for mercy. California, they waived all penalties. That's $35,000 she didn't have to pay. New York, they agreed to only look back 3 years instead of 6. Another $22,000 saved. Texas waived 50% of the interest. $8,000 saved. State by state, she negotiated. Some states were tough. Some were surprisingly understanding. We just want you compliant going forward, one told her. Final damage? $89,000 instead of $180,000. Payment plan for 24 months? She could survive this. But here's the kicker. Her competitor down the street got audited 2 months later for the same issues. No voluntary disclosure, full penalties, full interest. Had to shut down. This is a fictional example, but voluntary disclosure, it's absolutely real and available right now. It's literally the difference between financial death and a manageable payment plan. Do you have a plan to address past sales tax obligations? Most digital creators don't even know voluntary disclosure exists. They're sitting on massive liabilities, paralyzed by fear, while the Lifeline is available. Here's what voluntary disclosure offers. Anonymity during the process, payment plans, limited look-back periods, and penalty waivers or reductions. The takeaway here, coming forward voluntarily is always better than being caught. Look, sales tax for digital creators isn't going away. It's only getting more complex and more enforced. Every day you operate without proper compliance, you're accumulating liability that grows with penalties and interest. Every sale you make is a potential adding to a tax debt you don't even know exists. And when the states come calling, not if, it's when, you owe not just the tax, but penalties and interest that can destroy everything you've built. If you're a digital creator selling across state lines, if you want to sleep at night knowing you're compliant, and if you want to turn sales tax from a nightmare into a manageable system, you need professional guidance. At Numeratus, we specialize in sales tax compliance for digital businesses. We understand the complexity, we have the systems, and we can get you compliant before it's too late. Visit numeratus.us or contact us directly. Don't wait for the audit letter. The clock is ticking, and every day matters.